Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 9th of July. I'm Daniel Lam, your host for the podcast. Global equities have done very well year to date, but it is always interesting to look at other asset classes for diversification, such as gold. That has also done well this year, but in the second quarter, it has been range-bounding due to the dollar edging higher, US equities remaining strong, and the nominal and real yields are still elevated. But we do believe that 2300 is a very strong support level. Now, despite the start of a seasonally slow period for consumption, the latest data for May suggests that the official sector remains net buyers, and the exchange-traded product flows turned positive in June after 12 straight months of net outflow. Now, as the macro backdrop likely becoming more supportive as we move towards the end of 2024, gold has chances to break on the upside. In the long term, central bank buying remains one of the strongest positive factors. The World Gold Council Central Bank Gold Reserve Survey has been very positive over the last 2 years. Now, this matches with the official sector adding over 1,000 tons per annum globally. That's equivalent to over $60 billion annually. Now, this year's survey is particularly positive on gold versus the results 5 years ago. Now, back then in 2019, only 21% of central bank expected gold's share of total reserves to rise in the next 5 years, and that's compared to 69% in 2024. And in practice, 3,430 tons of gold have been added to the global reserves over the past 5 years, a near 6% increase in reported gold reserves. And that's from 10.6% at the start of 2019 to 15.8% at the end of 2023. Now, the reasons for these net additions remain broadly constant, and they're related to interest rates, inflation concerns, and geopolitical instability. And that last reason has risen as an incentive, and a greater number of EMs and developing economy central banks have cited inflationary fears. Thus, much of the recent buying has stemmed from developing countries. The 2024 survey suggests that there will be continued strong growth from the official sector for gold. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.